Welcome to the Capital Spreads Weekly Update. Today is Wednesday the 24th of November 2010. A pretty abysmal week so far. The market's very much down, sentiment seems to be downtrodden. The fact that we've had a confirmation that Ireland is seeking a bailout from the EU and the IMF hasn't done anything for the indices whatsoever. So the FTSE's down over 2% so far this week, and it looks like other markets are struggling as well. In particular, the euro is looking like it's sort of just on the brink of falling out of bed completely. And the risk of contagion is what's really getting to the equity markets as that sentiment continues. But not only that, the selling's been compounded by another few factors. Of course, in China, where inflation seems to be just getting a little bit too high for their liking. They're looking to rein in lending and possibly increase interest rates even more. So that's dampened sentiment towards the mining sector and energy stocks. But also, just recently, the unrest in the Korean Peninsula, of course, is further applying pressure to the markets and causing investors just to be a little bit nervy about that. Of course, any escalation in that area and further geopolitical tension will really cause possibly further selling going forward. And yesterday as well, we saw the FOMC minutes, which didn't really excite investors particularly. We didn't get anything unexpected from the minutes, but again, they just reduced their forecast for growth and increased their forecast for unemployment. So all in all, the week hasn't been particularly good. So the current situation is that the FTSE is just below the 5600 level, around 55.95. The Dow just above the 11,000 level, around 11,020. The euro's taken quite a hit and shed quite a few cents in the last few days. It's around 133.00, whereas sterling has just about held on to its own. It's around 157.85. And gold is just about the only commodity that hasn't really been hit badly this week from profit taking across risk assets. It's doing all right. It's around 1380 at the moment, but still well below its record highs and below that psychological level of 1400. So today we've got, we've just had the second release of GDP numbers for the third quarter in the UK. No revision there, so that's at least a good sign. And we also saw some slightly better business sentiment from Germany. Later on today, we get US spending and consumption data just expected to rise a little, and of course jobless claims, usually out on a Thursday but a day early today due to the Thanksgiving holidays in the US, and that's expected to decline. That's becoming more and more of a key piece of data as the investors focus very much on unemployment in the US, and the trend certainly looks as if the initial jobless claims are trending down towards 400,000. There's around 435,000 at the moment. So certainly investors will want to see if that trend is continuing, whether maybe this is a sign that unemployment is topping in the US and possibly looking to decline. That will also be, today is expected to show the lowest initial jobless claims since September 2008. So, and then of course we get University of Michigan confidence. So there might be a possibility that we could see something of a turnaround finally, but of course it's going to have to be some pretty good economic data to really shift sentiment that's so negative at the moment. But how are clients trading? Well, this recent downturn in equity markets is seen very much by clients as a buying opportunity. So they've been buying into the FTSE and buying into US markets, hoping that support levels will hold. And interestingly, they have done quite well in FX markets. They've been long largely sterling, which has been a lot stronger than the euro, and actually shorting the euro. So they've done well recently in FX markets, calling that correctly. No prizes for guessing what clients think of gold, again, and continuing their trend. They're very much long the precious metal. The rest of the week will be quiet. We've got US Thanksgiving tomorrow, so no US trading whatsoever. A few futures will be open for a half day, and then a half day for the US on Friday. So volumes will probably be low for the rest of the week, and we probably won't see too much volatility without any direction from the US markets. So the theme of this week, well, despite the risk of contagion in the Eurozone and also the sentiment that seems to really have been dampened recently, the markets have come off quite a bit, over 2% as already mentioned. I've got a chart of the FTSE here, and it slightly complements my colleague Zaid's FTSE chart from last week. There is, the question is this a buying opportunity? We're sitting right on the upward trend line for the FTSE, that trend that started this summer, and you can see that I've got a Fibonacci retracement as well, and the market has just broken below there, so that's quite bearish, but it seems to just be finding a little bit of support around this upward trend line. So that's why clients are buying into the FTSE at this level, but we'll have to see whether this, we need confirmation whether this is a buying opportunity or not. And that's it for this week. As ever, do give us feedback, media@capitalspreads.com.